this Snapchat is just wild to watch. I mean,
Right.
it just broke trend. Thankfully, okay.
Right.
I like it when you don't like a stock and it breaks trend,
Right.
Because now it's like, okay, the market agrees with both of us,
Right.
And that one to me, just by the way, so people know where trend is on Snapchat, this one it just broke it, which is just north of 16.5. So if it's below 16.5 and it is comfortably below that now, it's actually a bearish trend.
Right. And the thing with Snap is that is a purely sentiment-driven stock, and we had actually covered ahead of the last print and we all saw that short squeeze that happened.
Because you came just so, and again, timestamps matter, credibility matters, transparency, accountability, trust, Hedgeye, again, 10 years deep. But I mean, at the end of the day, Hisham came out on Snapchat bearish right out of the box on the IPO when the whole world of Tweeteratis or whoever out there with opinions and investment banking revenues and brokerage revenues fully loaded was bullish. So you watched it collapse. You were on the right side of that one too, and then you waited, and now you're sitting here doing what?
Right. Well, now I'm essentially assessing the setup the same way we did the last quarter. So, one very, very big thing within this space, within story stocks or stocks that are driven off of conjecture or sentiments, is being able to line up your catalysts, right? And ultimately, the reason why we had covered, and we're still on the bench, well, actually, let me break that out into two steps. The reason why we had covered is because we knew we were at a catalyst on the upcoming print. And we also saw...
Because the estimates had gone so low.
Estimates had gone so low, the entire sell side was jumping in on the bearish side of the trade. The buy side was largely shorting Snap against Facebook. And ultimately, what we had realized is that the sell side had overcorrected for a discrete, call it headwind, on the 3Q17 print, and it brought estimates so low. Snap didn't really need to do much to actually beat those estimates, but at the same time, because there was, call it an optical headwind in the 3Q17 numbers, it wasn't going to take that much to print an acceleration. So rate of change terms, when you have a company that had been decelerating and all of a sudden their revenue growth accelerates, you don't want to be anywhere
however
on the short
term
side.
it is. I mean, and for those of you who are short selling at home, and I'd encourage you to make short selling great again. This is a very important time in the market. I love short selling myself, if you can't tell. This is key. Just because you don't like something doesn't mean you have to be short it all the time. If something like Snapchat coming into the print was like 13 bucks, you don't want to, if you know that the number is going to be better than what the street is expecting, you don't short it into the number, okay? You don't just there's no such thing as short and hold at Hedgeye typically, especially with stocks like this, where expectations can flip around a lot. But now, it's safer to come back into the water.